how does this relate into the electric vehicle market? If the price of oil continues to collapse, stays at these levels, the price at your gas pump is going to go way down, could even be below $1 a gallon, unprecedented deflation in the cost to fill up your car. So how does that affect the total cost of ownership of, let's say an electric vehicle versus a non-electric vehicle? So, before this, the gas car was actually way expensive to, refuel or recharge than the electric vehicle. You're plugging in at home, usually like 33% of what you would be paying at the gas pump per unit of, per mile driven, just way more efficient to use it at home. So even if the price of oil collapses, maybe it comes closer onto par. That's a really small amount of the total cost of ownership, maybe 5% at most dramatic change because of this oil price movement. And so I don't think people were buying Tesla because, the price of oil was so high that it was making their gas car look too expensive. I think this is truly a lifestyle industry shift. And although on some level you might say this is going to, okay, it might, it does make it a little bit cheaper to operate gas cars. It could, for a very small amount of people, cause them to not go electric yet. But I think inevitably the inflection point is already passed. The technology of batteries, drivetrain, charging is all getting better and better and better. The internal combustion engine technology is stagnating. And I already think Tesla, in my opinion, has reached that inflection point and is way better than the internal combustion engine. And this small change in gas prices is not going to stop that. And even if it does slow it down a little, that massive tidal wave of improving technology is what will drive the adoption of Teslas and electric vehicles, not a slightly cheaper economic situation right now. And so that's my view on how this will affect the automotive market. And then on the flip side, we're seeing all this craziness in oil. I just read a Bloomberg article about how GM and Ford are running into massive problems with their balance sheet and our house of cards, something I've been saying on the channel forever, because these companies are basically banks. They're loaning, loaning financing operations so that you can buy a car for a super cheap interest rate. They're guaranteed, and what is that loan backed by? That loan is backed by this asset which you have to return the car if you can't make your payments or whatever, right? And so all of the assets and, cash flow lines on GM and Ford, I think they probably did a crappy job figuring out who they were going to loan to. The credit ratings aren't great. A lot of those people have gotten laid off. That's going to look really ugly. But at the same time, the asset that's backing all of these loans, the internal combustion engine car, the price of that is crumbling. The trajectory, the model of how these prices last over time for the internal combustion engine is crumbling. Nobody wants these used cars. There's a massive influx of supply. And I see this potentially being, just as much as the oil companies are a house of cards built on, financing, reserves and all of that, things with debt and keeping the dividend going. I think GM and Ford are as well. And so this is really, really fascinating. I just think we're just scratching the surface of seeing all of the economic and financial market fallout from the illness 19 crisis.